morning. You're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day, but first let's kick off with our banner story. Property prices are expected to recover next year. That's according to Colliers Philippines. The company forecasts that property prices will rise by 1.5%, while rent will climb by 1.7% in 2022. However, Colliers said this slow recovery would depend on a rebound in local and foreign investor sentiment, as well as a recovery in office space absorption. The same report found that the health crisis dragged prices by 13.2% and rents by 7.8%. It noted that a lot of disruption and vacancies have been rising across all major business districts in Metro Manila, and this had an adverse impact on the residential market, whether pre-selling or secondary condominium markets. For the years 2021 to 2024, Colliers Philippines expects the annual delivery of 8,600 units. Now, most of the new supply will be situated in the Bay Area, Fort Bonifacio, Rockwell Center, Alabang, Ortigas, and the Makati Central Business District. Colliers said vacancy in the secondary market may further rise to 16.9% this year. The company is urging developers to explore more creative leasing models and to consider fringe areas for their next project. Okay, guys, a bit of a pullback overseas overnight, at least in Wall Street, and even across the rest of the asset space. The S&P 500 index dropping for the first time in 7 sessions. You've also got oil fluctuating. That's after 7 sessions of gains. Still, on a weekly basis, crude oil did jump 8.9% last week. That's amid bullish signals from the OPEC and its allies, of course, that they will be limiting supply to clear out that surplus, which has been left behind by the pandemic. Another one that slid as well overnight, Bitcoin. That's after having reached a record on that Tesla $1.5 billion buy. Now you can see on my terminal here, the rest of Asia looking at a bit of a mixed start here. Just recall that, in China, markets are closed for the week in celebration of Chinese New Year, but you do see the Nikkei 225 down by 0.3% this morning. Over in South Korea as well, both indices there staging a pullback, except for Singapore. You're going to be seeing that up a touch by 0.1%. Now let's take a look at our own local index. Now recall that yesterday we finally extended gains, continuing for the 4th straight session. That was powered by the largest net foreign buying so far this year. We actually received 530 million pesos rather of net foreign buying yesterday, and that is also contributing to the strong turnovers of value yesterday, 12.3 billion pesos in trades. You can see us opening and continuing that uptrend. We're up by 0.2%, closing in on 7,100 levels yet again. Now, AB Capital did say yesterday that the sentiment was positive on that vaccine rollout. Recall that we might be receiving that first shipment by the end of the week even. We've also got Luis Sumlingan of Regina Capital saying that investors had repositioned after the release of the PSE rebalancing, and others had made bets, which is going to be ahead of the MSCI decision today. Now, speaking of PSI rebalancing, I did want to focus on the property space. That is, of course, our banner this morning, slow recovery being seen there. And apart from that issue of a slower recovery, you're also going to be seeing some names specifically affected by the deletion on the index, which will be effective on February 15. You can see Primex actually correcting a touch there. That's up by 2.9%. That's after having fallen 8.7% yesterday after it was announced it would be deleted. You can see the other names there up for deletion. Santa Lucia had declined as well yesterday, continuing on that downtrend. Bell is also recovering after having slid yesterday, 89.90 declining yesterday and still down by 1.3%. So recall that these are the names, the 5 developers that will be deleted from that index starting Feb 15. Now, I did want to focus on one particular stock, that is Globe, and they have just announced, of course, that was yesterday around 6 p.m., their earnings for 2020, and you can see that on your screens rolling here. Their fourth quarter revenue was actually up quarter on quarter by 2% to the tune of 37.3 billion pesos. That brings their 2020 revenue still down, which was as expected, but just a touch, so down by 2% year on year to 146 billion pesos. But if you take a look at their net income, their fourth quarter net income was significantly down 38% quarter on quarter, to 2.7 billion pesos. And their 2020 full year net income down 16% year on year to the tune of just a little above 18.6 billion pesos. Now, this, of course, comes amid the fact that they had actually spent quite a lot in terms of capex in the past pandemic year, and they're continuing with that trend. The cash capex is going to be around 70 billion pesos this year. That's what they're mentioning, and they are still optimistic to regain that momentum. Now, what, of course, fell here, they said no big surprises across the board, losing some revenues except for fixed line and home broadband revenues there. But of course, their main business, which was, of course, mobile revenues and data, that fell 7% year on year. They did mention this from President Ernest Cu, 2020, a challenging year for Globe, but prudent financial management allowed them to continue on with those cash expenditures. You can actually see the market buying into Globe. That's up by 0.7% to just over 20,000 pesos this morning. Now, here to chat with us about that and more, we have with us AAA Equities' President Matt Cabangon. Good morning, Matt, and welcome back.
Hi, Danie. Thanks for having me. Always a pleasure.
Matt, let's kick off with those Globe earnings. I mean, the market seems to be reacting positively to that, despite the fact it's a double-digit decline year on year in terms of net income. What's your sentiment here?
Well, Danie, as you mentioned, this is by and large expected, right? Globe is mainly a mobile data company. They have suffered last year because of the lack of mobility, and largely to the benefit of their main competitor PLDT, who is a broadband company. So it's really a tale of two telcos last year in terms of their diverging fortunes. Globe, I'm not too bullish on Globe this year, mainly because, again, while they are investing more into broadband, the mobile, they've invested heavily into mobile data, and for that to pick up to pre-pandemic levels, you're basically betting on us going back to full human mobility as if it were to 2019. So I think that's a tall order, and really it's really dependent on how quickly things get back to quote unquote normal.
Mm-hmm. Do you think that they're going to be pivoting and focusing their services more towards a fixed line and broadband segment, or is that something that you don't envision happening as they roll out their record capex?
No, I don't see that I don't see this as a pivotal moment in their corporate strategy, just because there's so much catching up to do on that end. I think that's a losing battle against, by and large, a larger company in PLDT. So I think Globe is very happy seeing Converge move towards that direction of home broadband. But I think Globe will firmly be on this track of being the number one player in mobile data. But again, the question there is, when will this pay dividends again, like it was 2019 all over again?
What about the valuations? I mean, PLDT has been, one of the best performers, if not the best performers of 2020 and even year to date right now. Do you think that Globe is cheap to be entering, if at least you're looking at the long term?
Well, Globe really has a unique selling point as a stock, not as a company, but as a stock, in that they are one of the very few that pay very high dividend yields. We live in a market now that has no yields anywhere. Bonds are anywhere between 4 to 6%. The big institutional pension funds, life insurance funds, their hurdle rates at 8%. So really, buying bonds is just a losing proposition. It's accepting that you're going to lose money and you're going to be short on cash to meet your obligations. So where else do you go? You look at the stock market, you look at capital gains, and if you want to replicate the cash flow of bonds, you look at dividend-paying stocks. And the ones that clear those high hurdle rates are really only a few names: PLDT, Globe, recently LT Group. So I mean, you really only have a small pool of high dividend companies that's helped pushing up their valuations.
Okay, Matt, what about Dito Telecom and their own proposition? And as you mentioned, it's going to be, a race towards who's better in mobile. But even as you mentioned, we're not going to be mobile anytime soon. So why are investors still piling up on Dito?
Well, I think the story of Dito is one that's really all promise, right? Nobody's judging the prospects of Dito based on their last year's financial statement. Uh, I, I think there's a lot of sort of investor imagination running there. I think people are bullish in that the current administration is very, very positive on Dito and basically breaking down our two-player market as far as mobile is concerned. So I think there are lots of reasons to be bullish on Dito. It's just that, in my view, a lot of that is speculative. But again, this seems to be a risk that investors are willing to take because, again, where are the yields?
Okay, Matt, I actually, I wanted to jump off of that point. This wasn't really part of my spiel this morning, but I wanted to ask you about speculative trades and retail traders, especially in the AAA equities platform. I mean, we've been hearing some reports that a lot of the trades so far have been, moving from index stocks towards smaller stocks and towards more speculative plays. Is this the time to be doing that? Is that actually something that's exciting for you and that you recommend for young retail traders to be doing?
Yeah, AAA equities, we're in a unique position where we're primarily an online retail brokerage. And we've seen this trend shift, I think, last October, where suddenly retail players and small stocks were having higher volumes than the SMs and BDO stocks of the world. It was a sudden shift and a trend that I think keeps continuing. Is learning about the stock market something that I recommend to young people? Absolutely, yes. It's definitely worth learning about. Is it something that you should dive into just because it's moving upwards? Probably not. It's hard for me to make a blanket statement, but if you are making the efforts to learn about markets and not just sort of buying in to these stories that so and so stock is up 30%, 50%. I mean, if you're coming at it with the right intentions, I 100% do recommend it.
Okay, and finally on that point, do you think that it's actually time to be rotating, not necessarily on speculative stocks, but on cyclicals, non-index players, especially now that maybe the valuations of the index players have already gone up?
I think the people who are investing in blue chips and the people investing in the more speculative stuff are entirely different demographics. You're not going to see a large life insurance fund or a pension fund be moving these smaller speculative stocks. It's really two markets in my mind. But is it time to rotate? I don't think so. If you are in the mindset that you are watching this market 24/7, looking at these smaller speculative plays that have significant upside, then by all means, that's the risk return profile you're going for. If you're an institutional fund that doesn't want to live with that kind of stress, then by all means, stick with the blue chips. There's alpha to be made on both sides of that coin.
Okay, and Matt, what about the so-called sin stocks? Some of them have been pretty defensive as of late. So you already mentioned, LTG, but maybe that's on the dividend play. But you've got these tobacco companies. You've got Emperador doing pretty well. You've even got gambling stocks doing rather well. What's your take on that? Is that actually really defensive right now? Is there a real story for that during times of crisis?
I mean, we've seen historically that every time we see an economic downturn, people want to drink.
Okay,
it's
so it's real.
It's a sad time. I do think it's something we're seeing globally, not just here in the Philippines. Emperador reported extremely high international sales. So I mean, this is a story that's real and something that's not exclusive to just the Philippines.
Okay, so it's not necessarily, a speculative stock there. There's actually a real proposition for these types of stocks during these sorts of volatile periods. Thank you so much for those insights. Very interesting, Matt Cabangon, AAA Equities.
Thank you.
Okay, guys, checking in on the biggest headlines. We're keeping our eyes on Malacanang is not keen on having a third Bayanihan stimulus measure. Palace spokesperson Harry Roque said there is a need to allow previous economic packages to run their course. Roque said the government's coffers might not be deep enough to fund another multi-billion peso revival measure. House Speaker Lord Alan Velasco and Marikina Representative Stella Kimbo earlier filed House Bill 8031, or the Bayanihan to Arise as One Act, or Bayanihan 3. It provides for a third round of stimulus measures worth 420 billion pesos, which is significantly larger than the amounts approved for the first two Bayanihan packages. Velasco says the measure enjoys the support of a majority of the House. He says the proposed law is backed by 162 out of about 300 members, including those belonging to the supermajority, the minority, and even the independent blocs. Recall that if President Duterte refuses to sign the bill, Congress may still override that veto and pass the law anyway via a 2/3 vote, with both chambers voting separately. The hospitality industry is urging the government to loosen restrictions on events, saying hosting gatherings like weddings would help make up for the weak rates the industry is currently charging. The Organization of Hotel Sales and Marketing Association said establishments like hotels need additional revenue sources to survive the pandemic. The group said occupancy rates for some hotels may be high, but it doesn't mean business is doing well, since rates are currently offered at huge discounts, some just to break even. In fact, the group said the total revenue generated during the lockdown may just be enough to sustain their operating costs and pay the salaries of their employees. The HSMA proposed health and safety guidelines to facilitate the staging of more events, including the segregation of guests in quarantine accommodations from the event guests via separate access to public areas, elevators, and entrances. Maynilad spent 1 billion pesos for replacement of 133-kilometer pipelines in 2020. That's as part of its initiative to improve service reliability. Now, these include fixing leaky pipes in Quezon City, Caloocan, Valenzuela, and other parts of Metro Manila. Maynilad President and CEO Ramoncito Fernandez says the waterworks provided employment for several workers, suppliers, and contractors amid the pandemic. The West Zone concessionaire has replaced over 2,700 kilometers of water pipes since its privatization in 2007. This is equal to over half of the pipelines it inherited from the government. And that's the first look into the business day. Today's Wednesday, February 10, 2021. Catch Business World live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel, and we are One News.